Hey everybody, welcome to Mortgage Today for Tuesday, October 17, 2023, and oh, what another rotten day it was. UMBS were down a big 61 basis points bright and early this morning. S&P futures were down 27.25 the first hour. The Treasury market is serving up levels of volatility last seen during the pandemic-era turbulence of March 2020. The U.S. 30-year yield shifted almost 13 basis points a day over the last 5 trading days, and the highest in more than 3 years and more than 3 times as much as the daily average over the last decade. Retail sales came in this morning at 0.7 on a 0.3 forecast. It's up 3.8% year over year. Last month was revised up 0.8 versus 0.6. Excluding autos, it came in up 0.6 versus 0.2 estimate. It is up 4% year over year. Excluding autos, gas, and building materials, it's up 0.6 on a 0.1 forecast. That's all tough for inflation. Industrial production also rose 0.3% month over month. If the data is any indication, the economy is still hot. This is a big need for this report, and it was broad-based. Internal components were even stronger, especially the control group that excludes autos, gas, and building materials. Unfortunately, good news for the economy is bad news for bonds. We also got home buyer confidence, which sank in September according to the NAHB Wells Fargo Index. Builders have reported lower levels of buyer traffic as some buyers, particularly younger ones, are priced out of the market because of higher interest rates. I sure wish they'd look at some of the lending business numbers and feel a lot better about how things are going, because we need them to build more homes. Can't point to anything to expect better interest rates coming up, but the damage was pretty much done in the morning. Today's morning commentary may as well have been the recap of very little happened that hadn't already happened right out of the gate this morning. In case you missed it, that involves sharper, stronger retail sales and a logical bond market reaction. We're actually using logic for once. Not only did the most current data crush the forecast, but last month was revised another 0.2 higher. Internal components were even stronger than the headline. Yields shot higher immediately and stayed the same terrible range all day. MBS tanked and mortgage rates hit new multi-decade highs. Ugh. This too shall pass, but it didn't start passing today. So at the end of the day, we were down 53 basis points on the 6.0 UMBS. Probably going to start paying attention to that 6.5 soon, once we get a little bit of volume into it. And the 10-year ended up being up at 4.838. It's kind of some more interesting news. The 2 to 10 spread has narrowed quite a bit from it used to be about 0.75 all the way down to 0.378. So at the end of the day, with MBS ending at 97.16, it puts us right at that 25-day moving average with no real trend data below it. Oof. For things you can control, how to build better sales teams. So check out our sponsor at wellthatmakesense.com. This is a one of 2-part summary of Alex Hormozzi's secret to building $100 million sales teams. So definitely check this out, where he talks about recruitment and onboarding strategy to build multiple $100 million sales teams.